Hello, everyone. This is John Thomas, the Mad Hedge Fund Trader, with you with our bi-weekly webinar. Go ahead and type in your first name and where you're from so I can say hello. And today we're going to talk about feed the geese when they're squawking. Yeah, that's an old Wall Street expression. That means when stock prices are high and the customers want to buy, give it to them. Of course, the customers being the geese. So let's see, we have here Kent from Chandler, Arizona, Dale from Oregon, Curtis, Melbourne, Florida, Drew in Colorado, and Tycho from South Carolina. We have Dawood from Pupukea. I know who that really is. Malcolm in Tasmania, Sala from India, and Chris from California. Okay, so let's get the show on the road here. Let's see. Slideshow, play from start. Okay, we've got it. And I am broadcasting to you live from Incline Village in northern Nevada on the shores of Lake Tahoe, and it is a beautiful day today. That's me right after I got back from a hike, stopping at the Tunnel Creek Cafe for my traditional pint of beer. So we have a lunch schedule coming up. I'm taking a trip around the world, one or two a year that I do. I'm in New York on June 16th. That's next Tuesday. Then London on July 10th, Amsterdam July 17th, Vienna, Austria on July 25th, Zermatt, Switzerland August 7th, Istanbul, Turkey on the 21st, Sydney, Australia on the September 4th, Brisbane on September 11th, and Honolulu, Hawaii on the 18th. And I should be able to capture most of my customers on a trip like this. So I'll be posting the lunches as the dates come up, and I look forward to meeting you all. Performance, we are up 1.53% month to date in June, 816%. We've been stuck at an all-time high now for months. It's been a real back and forth, and it's been a very tough market for hedge funds because your shorts go up faster than your longs when you are in a melt-up mode, which we were in up until last Friday. So we will endeavor to get those numbers up higher. I was there for Memorial Day, and one of the other guests showed me his father's or her father's Distinguished Flying Cross from World War II. That's it right there. You can see the propellers. Distinguished Flying Crosses after that had jet engines. Performance, well, we currently have 40% risk on, 20% risk off, 40% cash. Everything expires at max profit, will be up 5.89% on the year. And all of these positions, the two Micron positions expire in 2 days on Friday. Those are looking good. That was our weekly trade. And then the rest expire in 6 trading days a week from Thursday next week. Friday next week is a holiday. I believe it's Juneteenth, they call it. Okay, method to my madness. Let's start getting in the questions for today. And of course, the question of the day is the recent sharp sell-off in equities, the end of the bull market, or are we going to return to new highs after a rest? I think we return to new highs after a rest, but not very much higher than here. We may be stuck in a range now for the next several months going into the presidential or the midterm elections, which are on November 7th. So that would be 5 months away. And you probably won't be able to watch TV or listen to the radio for the next 5 months because it's going to be absolutely jam-packed with campaign uh, uh, propaganda. So, yeah, I think this could be the dead period prior to the election that we just got into. So that gives us a range to trade, and we will be trading it. And on the very high implied volatilities, Micron was at 102% implied volatility. We'll be doing the weeklies. Um, okay, another question here. Why is the price of oil so cheap? Well, given that the Straits of Iran are still closed, and the answer is Chinese conservation. China has cut back their buying of oil by 3 million barrels a day, and drawing on reserves instead. They don't want to pay $110 a barrel for oil. And the rest of Asia is in conservation mode. And 5 million barrels a day are getting out from the Persian Gulf via the backup pipelines, one going to the Red Sea and the other one going to the Indian Ocean in Fujairah. So some oil is getting out, but net, all the conversation, net all the canceled buying, we're still missing about 10 barrels a day. And that will eventually come to bite, especially if the straits remain closed. Um, let's see, another question is, well, here's a question here from Kent. Can you explain briefly why the price of oil worldwide is so high when the U.S. seems to have all the oil it needs and could price it anywhere? Well, the U.S. has all the oil it needs, but it's in the ground. Oil companies have pegged production at current levels until they see 2 quarters of back-to-back over $100 a barrel oil, and then they will start to engage in capital spending to increase production. Until then, prices go up, or they stay high and go sideways. So, yeah, we have the oil, but it costs about $10 million a well to get it out of the ground, more for offshore, and that's where it will stay until you can guarantee a return on that extra production coming on stream. Of course, the worst nightmare for oil companies is they increase production and then the straits open, the price of oil goes back to $60 a barrel, and they lose money on all those new wells. So that's what they're trying to avoid. Okay, every day the Straits of Hormuz stay closed brings a real energy crisis closer. Oil reserves globally are running out, and a crisis may be weeks away. Tech sees a major sell-off led by semiconductors, giving up all their May gains, and boy, was that long overdue. SpaceX IPO is sucking all the oxygen out of the market. Notice there have been pretty massive selling this week, people freeing up cash so they can pay the top of the market for the SpaceX IPO. Am I buying this? Absolutely not. I wouldn't even buy it with your money. Bonds break down to 1 year lows on government overborrowing, jobs data holding up remarkably well, but still half of pre administration levels. US dollars back on the driver's seat as rising interest rates rise. Bitcoin hits a new 2 year low. Where are all the hodlers now is what I want to know. Um, and here's another good question from David. Why are silver, gold, and palladium dropping? Well, that's very easy. High interest rates increase the opportunity cost of owning gold, which yields zero. And as rates continue to rise, which may happen for the rest of this year, gold and silver and palladium will either move sideways or down. Eventually, that creates a fantastic buying opportunity. I think gold may hold up at 4,000, which is a couple $100 away, but we shall see. And Uh, and what are your thoughts on uh, owning Microsoft? Well, I like Microsoft long term. I liked it even more when it was 25% cheaper than it is now. Uh, Microsoft clearly was a screaming buy in February, March. There's no way that a company with 92% of the operating system in the world was going to go bankrupt. So, yeah, that was the buy of the decade, and that has passed. The question is, do you want to chase it here? And the answer is probably not. Okay, so moving on. Global economy is warming up. There has been a definite positive tilt to the economic data over the last month. Um, and here's another good question from Justin. Given the oil situation, are you looking at additional nuclear plays? Absolutely. But the plain old fashioned nuclear plays, i.e., Cameco, which produces yellow cake, which is the nuclear fuel, which, by the way, is 0.72% enriched uranium, which is the natural level of enrichment of uranium that you find out in the mountains. Um, that's needed by all power plants, and China alone is building 100 nuclear power plants over the next 10 years. So that was always the bull case for Cameco. Uh, and we've been recommending that for really 2 years now. And I think we've gotten two doubles out of it since we first started recommending that stock. Also, it helps that I used to work for the Atomic Energy Commission and know the nuclear biz inside out. Um, okay, global economy is warming up. Non-farm payroll comes in at a hot 172,000. 2 years ago, hot used to be 372,000. I doubt we'll get anywhere near those numbers for the next couple of years. Headline unemployment rate steady at 4.3%. And labor participation rate is at a 4-year low at 61%. Uh, First quarter GDP revised down to 1.6%. That is half of the economic growth rate um, that we saw under the Biden administration. Uh, people talk about how wonderful the economy is, but it's literally a dozen companies. The rest of the country, the S&P 490, 493 are going nowhere except in rare occasions. And whole chunks of the industry, like anything interest rate sensitive, like housing, like airlines, cruise ships, trucking companies, anything fuel related, they're all suffering. Um, do you think most of the chip stock downturn is done, or do you see significant um, additional future downside? Yeah, I see more downside, um, and another 10 or 20%. They were way, way overbought. So, and people want to take profits. They have money in the bank and they just want to, a lot of people were just holding until the first down day, quite literally. And that down day was Friday, and they're basically selling every rally now for the indefinite future, including me, by the way. I have shorts in Micron technology, and those are working very nicely. Thank you very much, Mr. Market. Um, Okay, so let's see, we got that FOMC minutes worried about inflation risk, private employment is up, Bitcoin breaks 18-month low and could go much lower. U.S. services sector picked up in May, manufacturing hits 4-year high, Chicago PMI blows out to the upside. Market timing index down to 31, and we probably are going to get into screaming buy territory down in the teens before this sell-off is over. So that's what I'm looking for, is a move down here. Um, and it's been a very rapid decline. If you look at the big sell-off, has just really been in the last 2 days. We were all the way up here in the 60s, before the Friday meltdown started. So we're down here now at 31. It's been such a vertical move down, it's hard to register on this chart. Weekly jobless claims up 12,000 to 225,000. And here is Tahoe Tom's, the cheapest gas in town at $6.49. Ouch. Uh, welcome to the new world. Okay, let's go check for questions here. Jesus. Here's a question. Is it best to sell munis now, even though I use it for income? I'd say no, because if you sell your munis, unless you have it in a tax exempt fund, you have to pay taxes. Um, and I'm expecting interest rates to go up, but not for bonds to crash. So it's probably not worth paying the execution costs to go in and out of munis. And you have to ask the question, are you able to buy at the next bottom? Probably not. Most people sell bottoms, buy tops. I've been watching this happen for 60 years. I don't expect it ever to change. Um, okay. Any other questions here? Uh, is the economy going from good to great? No, it's going from um, good to mediocre. That's what the data figures say. I'm sorry, but 1.6% and falling GDP growth is not a great economy. It's a barely hanging on by its fingernails economy. And if the oil crisis does hit, the Straits of Hormuz don't open, expect a recession. Very simple. Okay, stocks, the peak is in. SpaceX prices on Friday. Anthropic files for the IPO, so that makes all three AI companies now going public at the same time. NVIDIA boosts dividend and share buybacks. Broadcom dives 15% on weak guidance. Morningstar rates SpaceX at half of its proposed value. In other words, about 800 or 900 billion dollars, and I think they're probably right. Of the 1.8 trillion valuation, it'll probably trade over 2 trillion on the first day. 90% of that value is Elon Musk, and only 10% represents the valuation of the standalone company as it is. Alphabet to raise 83 billion in equity capital. 10 billion of that is coming from Berkshire Hathaway. That's an interesting move. Berkshire Hathaway happens to have 400 billion in 90-day T-bills in cash, and their stock has moved nowhere in a year. Hewlett Packard jumps 28% on their AI play. NVIDIA is going to move into a laptop business. I'm not sure that's a move that will look like a great idea in retrospect. Why move from a business with a 75% profit margin to one with a 25% profit margin? Beats me. And then Dell explodes to the upside also on an AI play. So let's go through the charts. 90-day T-bills, 3.72% this morning. Good place to hide out. And here is our range for the last 2 months. It's been a monster 2-month rally, about 25%. So look to give up at least a third or half of this. So this takes us back down to about 732 points down below where we are now, depending on how the SpaceX goes. If SpaceX fails or crashes on the first day, and I give that a 50-50 probability, we're going right back down to the 9-month lows at 630 in the S&P 500, and it will give up all its gains for the year. So yeah, a lot is hanging on this SpaceX issue. Um, and also you can expect sell-offs now every time a rocket blows up. Okay. Let's just reading some questions here. Okay, so momentum collapsing as it always does in down markets. Um, SDS, big spike up from 55 to 62. That's about 10%. I've been telling people, buy some SDS as insurance when they were giving it away for nothing. So that's starting to pay off now. VIX hit 23 and a half yesterday. Um, Not high enough to get me selling though. And the short VIX ETF um, had a tremendous run and gave it up just in the last couple of days. Uh, Dow looks like a new all-time high. Um, Russell 2000 giving up its gains. NASDAQ new high, and then one of the biggest sell-offs in history, 750 down to 600, down to 580. That's almost a 20% sell-off in 5 days. This was just begging to happen, and it finally did. China doing terrible on the high oil prices. Japan incredibly hanging on to its highs. It's also 100% dependent on imported oil. Uh, if I knew oil prices were going higher, first thing I'd do was short Japan. If I'd done that, I would have lost money. Europe is moving sideways. German DAX also sideways, and emerging markets sideways. So let's go through our stocks. Nvidia hit a new high and then gave it up, down 10% in a week. Microsoft, after a monster rally, 355 up to 460, it's about 25%, gave half of that gain up very quickly. Meta still going nowhere. Apple, big sell-off there after the lack of a definitive AI strategy at the developers conference. Alphabet selling off. All the techs, either had big sell-offs or gigantic sell-offs. Amazon selling off, Tesla selling off as people sell Tesla to buy SpaceX. Netflix, new lows for the year, very close. Don't know why this is selling off, but I'm not touching it until I find out. Palo Alto Networks coming off all-time highs, told people to take profits on the leaps. Micron Technology, huge sell-off here. Um, this is a 6 months chart, but the stock's gone from 1100 down to 800 in 5 days. I mean, that is an incredible move. That is almost 30% sell-off in 5 days. So this was the most overheated in the market, and the number everyone's shooting for is the 50-day moving average down here at 653. And that's true for all tech. 50-day moving average is probably where you want to start legging back into these things. AMD, sell-off. Salesforce, big sell-off after a terrible performance. Ouch. Adobe, same thing. Snowflake, holding on to gains. Strategy, new 2-year lows. Ouch. Um, Strategy selling Bitcoin to cover its dividend. Not good for inspiring confidence when the world's largest owner of Bitcoin becomes a seller. ROM, monster sell-off there. 175 down to 130. That's about 25%. Oracle selling off. Zoom selling off. And incredibly, in June, beginning of June, we got snow at Incline Village. See if I can get this to play. No. Mm. Yeah, it's beautiful watching it snow like this. Got down to the mid 20s last week in Lake Tahoe, incredibly cold, and several backcountry hikers got trapped in the snow. It usually doesn't snow this late. Um, okay, second half of the barbell. Goldman Sachs, after a ballistic move, giving up its gains. We have a long position here, expires in 6 trading days. So I think I'm going to hang on to those and run them into expiration. Um, and the same with Morgan Stanley. We have a position there. JP Morgan Chase going sideways. Bank of America, top end of its recent range. So is Citigroup. Um, Charles Schwab, just dead as a doorknob. And the reason this is going nowhere is Schwab had been earning a lot of its money taking deposits from customers and not paying any interest. Now, suddenly, they're being forced to pay interest on those deposits because of competition from other brokers, and that's why the stock is going nowhere. Interactive brokers, on the other hand, new all-time high from exploding options volume. Berkshire Hathaway, dead in the water. BlackRock going nowhere as long as prime credit is hanging around. Uh, and metals and mining, big sell-off there on recession fears, on higher interest rates and higher oil prices. Boeing just announced deliveries in May, 60 new jets. That's a multi-year high. GM hanging on to its gains, don't want to touch. UPS forced us out of our short. It's now back in the money. If we'd kept the position, we'd be making money here. Caterpillar, close to new highs. Deere moving sideways. Freeport selling off on weak copper. And Walt Disney trending down once again. Industrials hanging on to their gains. Union Pacific, the same. Walmart, big sell off on weak guidance. So that's a no touch. Costco going nowhere after that enormous tariff relief gain. Delta close to the highs. The front end of the plane is getting bigger and more expensive. Those are the first class seats. That's where airlines make all its money. Transport's getting a nice rally here. And healthcare finally got off the bottom, rallied big, and this one we kind of missed. It's tough to call these bottoms when everyone's going gaga over AI stocks. Amgen also starting to rally. Visa uh, crawling off the bottom. Consumer discretionary sideways. Raytheon, boy, what a sell-off! What a disappointment this was. And that's a local skier uh, parked at a local place for breakfast. I thought it was a interesting paint job on the car as well as the vintage cross-country skis. Bonds got demolished. So let's see. Okay. Here's someone saying they paid $3.85 for gas yesterday in Virginia. Virginia has 5% of the roads that California does. That's why California has such high gas taxes. We have many hundreds of thousands of more miles of roads more than any other state. Um, okay. Why is Tesla falling? Answer easy there, so people can buy SpaceX. Where's a good place to buy? Uh, Boy, if it gets down to 330, 340, I'd be buying with both hands because there is a long-term business story there. Okay, bonds. Hot non-farm payroll for May demolishes the bond market. Government bond markets tumbled around the world, sending yields surging on intensifying fears that the war-driven price shock will force central banks to raise interest rates, not just in the U.S., but all over the world. Uh, Looks like the government's ability to borrow is not unlimited after all, rocketing national debt at 39 trillion, exacting a price. Private credit panic is still on. Okay, here's the TLT. Multi-year sideways move, no action, no touch. We got a brief sell-off there. It made it right back. Uh, Here's the yields. Again, really going nowhere. Um, we're stuck at 455. Junk bonds also going sideways. Muni bonds just had a nice rally. Emerging market debt going sideways. And the TBT is even going sideways. Just no action in this market whatsoever. This is the cable car at the former Squaw Valley. Now it's called Tahoe Palisades. And this actually, the cable broke on this during the 1980s, killed a couple of people. And then we learned about the wonderful world of used secondhand cables. And it turns out Tahoe had been using cheapo cables they bought secondhand, third hand, fourth hand from Yugoslavia. So after that, California passed a law saying they could only use brand new cables on this cable car. Okay, foreign currencies. Let's see if we have any more questions. Um, you did a great piece on Broadcom last week. Do you see it a good long-term buy and a hold? I do, but at lower prices. You have to wait for the overbought condition in the whole semiconductor to ease more before you dive back in again. And another question here. Um, are Chinese stocks a good place to hide out during market volatility? No, they're not. China is the most exposed, number one, to high oil prices. Number two, a slowdown in the global economy. They make all their money on trade. So, but at some point, China is a screaming buy. Their economy is growing at roughly 3 times the rate of the US. So you want to get in that at some point. Um, just not right now with the Straits of Hormuz closed. And something like 80% of China's oil came from the Persian Gulf. All right, US dollar jumps on the hot non-farm payroll. Rising interest rates are always great news for the currency. Foreign currency trade may get pushed back into 2027. Strong dollar could continue for the rest of the year, especially if interest rates here keep rising. Finally, I can afford my Europe trip. It just saw a 5% discount in the last couple of weeks. Once the Iran war ends, currencies will rush back to new highs. The problem with that is the Iran war may never end. It may, you know, uh, be permanently closed as surrounding countries build pipelines to other areas. So once interest rates do start to fall, you want to pour into the currencies. So here's Aussie dollar giving up its gains. Uh, Japanese yen is sitting on the bottom. Euro going sideways. British pound going sideways. And emerging market currency. Suddenly, the whole currency trade has died. Uh, this is at a crafts fair at Palisades, Tahoe, and they just so happen to have a Swiss taco truck selling Gruyere sandwiches and apple strudel. Boy, I was the first there in the morning when they lined up. They also had pretzels, and I asked them, how do you get parts for a Citroen truck in the United States? And they said, with great difficulty. They have to find them on the internet uh, in Europe. Here's someone says Dan is thinking about buying housing stocks. Absolutely buy them on a long-term view. Interest rates can't go up forever because eventually the interest rates cause a recession and interest rates then collapse, and that's when housing takes off. So it's a long-term view here. Suffice to say, the entire sector, which is about 20% of the U.S. economy, um, is has been dead meat now for 5 years. That is a long time. And in fact, when I was looking at the prices in Lake Tahoe, those haven't moved in 25 years. Yeah, the condos there was the same prices that they were when they were brand new 25 years ago. So um, that has not been a great investment. Okay, here's another question from Sebastian. Why is the dollar US rising? Um, and when the economy is weakening, and the answer is interest rates. You know, the currency market totally driven by expectations of the next interest rate move. And I think it's safe to say the next interest rate move here is up, and the Fed futures market are discounting a 50% probability of a rate rise by December. And as of Friday, some of those forecasts have been moved all the way up till September. So rising rates, bad for housing, great for the dollar. Okay, energy and commodities. Let's see what other questions we have here. Um, Commodities have sold off recently. When can we see a reversal, or are we dead in the water for a while? I think we're dead in the water. I think we've entered a pre-election, pre-midterm election malaise where nothing goes anywhere for 5 months, and um, we are stuck to trading ranges which get increasingly narrow going into election day on November 7th and then explode to the upside, no matter what the election outcome is, because of the fact the election is gone. That is the normal pattern for all major elections. Okay, US inventories in free fall. The market could care less. Uh, Down 6 weeks in a row. Commercial crude oil stocks, excluding the petroleum, the SPR, fell by 8 million barrels. Uh, Chinese conservation is allowing the U.S. to avoid an energy crisis. Backup pipelines in Saudi Arabia and the Emirates coming on stream. Extreme conservation measures in Asia, like work from home, 4-day work weeks, and even odd license plate driving days are helping. Higher U.S. production won't come on stream for at least 6 more months. Okay, there is oil, and this is why I've quit the weekly oil trade. We are going nowhere, and the range is now too narrow to play. What you want to do is wait for a spike up, sell it, spike down, buy it. Um, if Trump says there's a peace deal at hand, it'll spike down, buy that. If Iran responds with another missile attack, it'll spike up, sell that. That is the oil trade of 2026. USO, same. Energy Select, going sideways now since the war started in February. All of the move in energy was pre-war anticipation back here. ExxonMobil, same chart. All of these energy plays all have identical charts. Nat gas trying to come off a bottom. And here's Comico, which I was talking about earlier, screaming buy. Your last chance to buy this was end of March. Buy every dip in Comico is the message. That's me on Veterans Day with some of my veterans friends. All the World War II veterans are gone. One or two Korean veterans barely making in. All the other old guys you see are Vietnam War veterans. Okay, precious metals. See if we got any more questions. Okay. Right. 4.2% inflation is the highest in the last 3 years. Will the stock market be able to muscle through because it's so low and not high like 6% or 8%? Well, the problem with 4.2% inflation is that we're on the way to 6% or 8%, and that will hit when we actually get the oil crisis, when all of our reserves run out, and oil goes to $150 a barrel. So people are just waiting for that to happen, and that could be only weeks away. So um, this is why I've been keeping my position so low. The risk in all markets right now is at multi-year highs, and that just doesn't justify taking bets with my money, let alone your money. Okay. All right. Soaring interest rates, demolishing the metals as they always do. Um, Gold breaks the 200-day moving average. And as my friend Tudor Jones once told me, nothing good ever happens under the 200-day moving average. Opportunity cost of owning precious metals is rising. Substantial profits from last year still to take. Gold seems headed to 4,000. That's down about 200. But the next move after that's probably to 10,000. Central banks worldwide are buying, and the most unreported big development of the year is the fact that gold has become the largest asset class held by central banks worldwide. It's about 25% of total reserves. US Treasuries have fallen to 20%. They were the highest asset class for 80 years. And of course, foreigners have been dumping our bonds because of lack of confidence in the current US government. So, if a government is making threats to you, seizing your territory, uh, you know, uh, imposing tariffs, you don't want to buy their debt. Imagine that. So I think the outlook for the Treasury market for the rest of the year is terrible. Um, Gold will be a huge buy once the war in Iran ends and interest rates fall. Long-term bull case is still intact. Okay, let's look at gold. And yikes, I don't like that chart. Boy, it's looking like new lows to me, and breaking the 200-day moving average is a big deal. GDX looks terrible. Barrick Mining looks worse. Newmont Mining looks even worse. Silver just dead in the water, and we got stopped out of our long there. And fortunately, we stopped out the second it broke 65, and that proved to be a wise move. Again, getting killed by interest rates. Silver miners down, wheat and precious metals down, platinum down. There's a view from my daily hike up to the Tahoe Rim Trail. And every day, Lake Tahoe is a different shade of blue, and I never get tired of looking at it. Okay, let's look for more questions here. Long-term strategy is to buy gold. Yes, it is, but wait until interest rates start to go down. That is the one incentive you need to get the world back into precious metals. And, central banks aren't stupid. They like buying dips rather than rallies. So they're going to hold back too. Okay, existing home sales jump 3.2% annually. Single family homes come in flat. House prices are flat. 30-year fixed rate mortgages, 6.51. That is killing the market. That is a 9-month high. It averaged 5.98% until the end of February when the war broke out. So the war basically killed off what was a nascent housing recovery. Rocketing interest rates have stalled this market for the foreseeable future. Um, uh, Prices are still rising, but just marginally. Uh, Crown Castle International, the whole REIT sector has caught on fire recently. CCI is one of them, 4.68% yield, and I expect this to continue. U.S. home construction interest bouncing along the bottom of a multi-year range, and D.H. Horton doing the same. So one more video to go today. This is after I do my 5-mile hike every day. I go down to the beach and jump in the water. And the water is so cold, you can only stay in for a minute. After that, you start to go completely numb. But boy, does it wake you up and takes care of all your back pains. I want to go there now. Okay. All right. And then it's back to California, and the spring poppies are everywhere. That's the official flower of California. And I used to plant my properties with pounds and pounds of these seeds. All right. What do we do about this? Stocks buy only the biggest dips, bonds stand aside, commodities stand aside, currencies buy dips. Precious metals buy dips, energy buy dips, volatility sell over 30, real estate buy dips. Next strategy webinar to be announced. I am boarding the Queen Mary 2 in New York exactly 1 week from today, and I am going to take a well-earned vacation. Um, I've been trading like a fiend all year, and it's very hard work. So I will announce the next webinar when I have a stable internet and a good place to broadcast from. And actually, I'll be going from the Brooklyn Cruise Terminal, which is where all the New York ships leave now. That's me at the Pebble Beach Car Show a few years ago with a vintage Rolls Royce. So this is John Thomas, the Mad Hedge Fund Trader, signing off for today. Good luck and good trading.